Hey, how's it going, everybody? I hope you and your investments are doing well. This is going to be a simple video. It's been a while, so I thought I'd just give you an update, basically everything that's going on in my portfolio. I'll introduce myself. My name is Steve Coleman. I put $150 every week into my tax-free savings account, and I'm sharing this investment journey with you to really show people how easy it is to get into investing and how quickly these things start to accumulate and how simple of a plan you can start with. You can make it as complex as you want. And what I've started doing this year is really trying to keep things a little bit more simple, and let's kind of just show you what things are looking like. So let's get into that. Let's look at basically, all time. Right now, I'm so close to $25,000 in the account. All I really need is like 2 days consecutively, maybe like 1 or 2% increase, and then maybe I've hit that target at $25,000. But so yeah, right now you can see I am down negative 5%, basically $1,400. That's all time. For the year, down negative 8%. Obviously, within this past year, starting, it was April, things really took a hit, and we haven't quite recovered from that yet, have we? Here's signs of recovery, right? At the 3-month, 0.87%. Basically, I'm up $210. For 1 month, there goes that story. Down negative 2.15%, $540 down. 1 week, down negative 2.51%. And then for the day, the previous day, I'm up 0.05%. So it's really, if I go back to the 3-month view, things would go on up, but things have plateaued again. The market being down is not a terrible thing because that gives us a chance to buy low and dollar cost average our positions. So let's take a look at what I'm currently holding, and let's change it to total value. So I'm holding some AQN. I have 150 shares of AQN. This one's was doing well, but then they had a very, very bad quarterly report, and because they're holding a lot of debt and because some of it is variable interest, investors are not loving that. So they have dropped their share price. Well, their share price has dropped, but they have also recently announced that they're dropping their dividend as well. Then we got Aecon. I got 1,700 shares of this one. This is a perfect example of dollar cost averaging because once upon a time, Aecon was one of my lowest stocks in my portfolio, but they've since had a bit of recovery, not completely, but enough that it is now competing for like my #1 spot of my individual holdings. All the individual shares I hold, Aecon, a ticker symbol ARE, is really up there now. All because I put a lot of money in when it's really low, and then when all of a sudden that price started going up, it just really rebounded. BCE, this is another one, 25 shares with BCE, $1,500 in BCE. Its share price has dropped a bit lately, so this might start to be a good time to buy into some BCE. Again, for me, it depends on when you've bought into the market, so this is not financial advice. If I'm saying it's good for me, that's primarily because it might actually be good for me. Doesn't mean it's necessarily good for you. BEP.UN, so that's Brookfield Renewables. That's another 42 shares. This is one of the first shares I ever bought, down negative 26%. I bought them when they were high, at the height of, oh, there my screen just turned off. Meant to turn that off previously. Anyways, I digress. Just recently bought a little bit more into this. I put $150 every week. Just last week, I put most of that $150 towards BEP. Their ex-dividend date was coming up, so I thought, here's a perfect time to kind of buy into it. It's low. It's one of my lower stocks from a unrealized gains perspective, so it was like, okay, time to buy some of this. BNS, 22 shares of BNS. Again, you're going to see a lot of these in the 1,500 category because I try to keep my individual stocks nicely diversified. Then we got Chorus Entertainment. This is now like one of my lower stocks. It just keeps kind of getting hit a bit. 600 shares of Chorus. Because again, it is low, and so far there's been no rumors or any kind of news of it cutting its dividend. I think its dividend rate is around 12%, dividend yield, 12%. So I am very, very tempted actually at buying a little bit more into Corus Entertainment. Again, I'd be lowering down my dividend yield, and I think I did a quick calculation, me buying roughly $150 of shares into Corus at 12%. That's, I think, $1.50 a month. I did the math, and basically what I would be getting additional to my monthly dividends. So it's very, very tempting to kind of really increase. Right now, I think I'm getting 144 for the year of dividends from Corus Entertainment. Diversified Royalty Corp. So this one, again, I bought this when it was really low, 480 shares. It's very economical, easy one to buy. It was my pocket change. Basically, this was the stock I bought after I bought any of the other bigger purchases. If I had any money left over, I put into Diversified. They're a monthly paying dividend as well. Should be coming at the end of the month, basically, which is where we're at. And so yeah, and it's now kind of rebounding, and so it's up to $16,000. Interject Renewables, right now it's at $1,400 roughly, just shy of $1,400. Renewable energy company, ticker symbol INE, 98 shares. Be nice to get that to a nice round 100. I plan on putting more money into the renewables to have a bigger slice of the pie in that respect. Again, I try and keep things diversified, but then sometimes I let some sectors kind of grow a little bit stronger than others. And renewable energy is just one that I kind of feel strongly about. So then we got Manulife, ticker symbol MFC, 58 shares. Again, $1,500 worth of MFC. And this, again, another one where just eventually I'll kind of put a little bit more money into this one. Nothing urgent. Obviously, it's up 8% on this one, so I would wait till it's a little bit lower before buying more stocks, and just kind of probably be more part of a diversification plan than any kind of strategic buy with them. Pizza. They are up on 1,400 shares with them, 104 shares. I'm up 16%. This is one that I'm doing really well with Pizza. It actually competes sometimes with the number one spot with between Royal Bank and Pizza. Where I remember my wife thinking, "Why are you buying into Pizza?" Like Pizza. Like I like pizza personally, but just then buying stocks into it, it just kind of made sense to me. So, and it's paying off. So again, yeah, I'm up $100 with up $200 with Pizza. So this, great, and it's a monthly paying stock. Always pays at the 15th or whatever, middle of the month. So that's a great, reliable dividend to receive from Pizza. Then we got RioCan, so our real estate investment trust, 68 shares, and again, this one's just shy of $1,500. $1,500. And it's doing okay too, and almost 7%, almost $100 up. And so again, I'll probably have to start putting some money into this one because it is kind of starting to become a smaller slice of that diversification, and try and keep it even. Just one of those different strategies that you can try to kind of just make sure that you're kind of protected. So if one sector goes down, the other ones, will kind of keep your portfolio afloat. And we've got Royal Bank, 13 shares, almost $1,800 there, almost up 25%, up $350. Royal Bank, this is basically one of the financial institutes, first financial institute I decided to buy into, just because I was a Royal Bank customer, and I was like, you know what, I'm tired of paying you banking fees, it's time that you paid me something. So they just actually recently paid their dividend, and I received, it was like $17. So not too bad. So I probably made more from Royal Bank if I were to sell it, so that those unrealized gains. Again, this is the biggest gain that I've received so far. So again, only if I sell, but most of the time I'm holding for the long term. And then we end the portfolio with VDY. This is Vanguard's High Dividend Yield Canadian ETF. And so this is where I've been starting to put most of my money every week into, with some exceptions to that rule, as I mentioned last week, putting more money into Brookfield Renewables. So every week, generally $150 goes in. 3 shares, I think it gets me like 120 or so, depending on the price. So I'm able to buy 3 shares every week into this and just let it roll. You know, so it pays a monthly dividend, usually at the beginning of the month or the first week of the month. And you know, so I have $6,000 there. I'm currently down negative 8% or $526 for $526 with 140 shares. And yeah, eventually, you know, when all the companies kind of recover, this will grow nicely. And again, I look forward to those monthly dividend payments. That's what my strategy is. I buy Canadian dividend stocks and I just get those dividends, reinvest them into the positions, and just let it snowball. So that is a look at the portfolio and what I've been holding and what I've been buying. So that is basically me in a nutshell. Really close to that $25,000 goal, which again, if you've watched any of my previous videos, which highly recommend. Also, like, subscribe. Hey guys, if you're this far in the video, like, subscribe. Join me on this adventure. I like to have some topical conversations, portfolio updates. Please stick around, like, comment, all that stuff. You know, it helps me, and it just grows this amazing community that we're having. Again, my original goal for the end of 2022 was to have $25,000 in my portfolio, but you know, things have not turned out that way, especially with 2022. Let's hope that 2023 is better. That is all I had to kind of share in this video. Wanted to keep this one really simple, just because, you know, probably like you, work is busy and finding time for these short little videos, you know, you gotta squeeze it in when you can. So, especially if you are living in Southern Ontario, you know, we just got walloped with a whole lot of snow and freezing rain. So, most of my morning was spent shoveling. I need to kind of go give myself a good caffeine fix before I have to start my work day. So, we'll see you in the next video. Keep it in the green, and thanks so much for joining me, and we'll take care.